welcome to the third annual Edelman Smithfield Investor Summit. My name's Andy Wild. I'm the Global Head of Financial Services at Edelman Smithfield. And I'd like to thank you all for coming today. I'd like to thank LSEG for hosting us and to say thanks in advance to the brilliant lineup of investors that you'll hear from throughout the morning. Before I welcome the City Minister, Bim Afolami, to the stage, I would like to remind everyone that we're fortunate to have a lot of journalists with us throughout the morning. So everything is on the record. And after our fireside chat with the City Minister, each panel that we'll hear from is 45 minutes long. That's 30 minutes of discussion and then 15 minutes for Q&A. So everyone will have the chance to ask questions should you like, and there'll be a roving mic for that. So may I invite you to the stage? And just as you're making your way through that huge walk, by way of introduction, Bim Afolami is the MP for Hitchin and Harpenden and the Economic Secretary to the Treasury. He took the role at the recent cabinet reshuffle, and he took over from Andrew Griffith as City Minister at that point. So he's only been in the role for about a month. Before becoming an MP in 2017, he was a banker with HSBC. So if you like, has kind of lived experience of the need for the various reforms to the city which Andrew Griffith began and for which he's now responsible. So Minister, thank you very much indeed for joining us. We're absolutely thrilled that you could be here. I will wander over to this seat and avoid the mic. Thank you very much.
No problem.
I think the reforms are probably a very good place to start.
Sure.
Your predecessor spearheaded the Big Bang 2.0 reforms, and they're quite wide-ranging. So perhaps we could start by asking, of the many proposed measures, which do you think will make the biggest difference?
Look, thank you. It's a pleasure to be here. I think the first thing I want to say is why, right? Like, why are we doing any of this stuff? And the way I think about it is this. Post-Brexit, when we had to take a look at our regulatory architecture in the City of London more broadly, it gave us the opportunity, stroke necessity, to address some of the friction points that have developed over the last 10 to 20 years, okay? Now, the reform, there are pieces to that puzzle, but I'm very optimistic that the legal and regulatory reform that we're doing, on top of the governance reforms that we're doing, on top of the cultural change that I'm hoping to help with working with the department and the Prime Minister and the government to help with the regulators in particular and with the media, those three bits, right? So legal and regulatory reform, governance and cultural change, together, 2024 is the year when we would have addressed those points and make our public markets match fit again, right? So that's how I see the overall architecture. I think one of the difficulties with the whole Edinburgh reforms, which include everything from changing to ring fencing regime, to investment research review, to getting rid of the terrible MiFID II rules around research, which means that we can actually get more research into small, medium-sized public companies, for example, round the way through to all sorts of other things. They look seemingly unconnected, right? But they are all part of addressing the friction points that have made, in little bits, the public markets not work as well as they should. We're unblocking and smoothing out, should I say, those friction points. And what's this all fundamentally about, and what I'll be building on into 2024, is to build, making sure that the public markets help grow the British economy and make sure that that growth is shared by as many people as we possibly can. So that's the why about what we're doing, and that's what I hope to be able to communicate to all of you investors and to the city and more broadly in 2024.
Well, I mean, it's very interesting that you use the words, making public markets match fit again. And obviously, shortly this morning, we've got a panel all about the equity markets, and I dare say that those moves to re-equitise the UK stock market will be a key topic, in particular getting pension money into equities. And there's been quite a lot of doom-mongering, I think it's fair to say, around what the future looks like for UK stocks in some quarters. And do you really think that it's kind of possible to have a reset moment for UK markets? And sort of building on that, do you think we will close the kind of oft-cited valuation gap between the UK market and the US market?
Look, so there are two aspects to this. You have what is happening globally, which has been a shift over many years towards bigger and stickier private markets. Everybody here knows that. That's not just the case in the UK. It's also the case in the US. It's the case across Europe more generally, okay? And that has advantages and disadvantages, but it is a global trend, and we've got to accept that. Having said that, I think everybody knows that we have got to increase just the amount of capital going into our public capital markets, whether it be sort of big cap FTSE 100 type, or indeed small and medium size businesses. How are we going to do that? One is the reforms, which we call the Mansion House reforms. Yep. What do they mean? They mean that our pension funds will have more capital available to invest in the UK. We've laid the statutory instrument for that, which is the parliamentary. We've gone through the parliamentary stages for that. Those were laid the other day by me. That is actually happening now. Now, don't get me wrong. There's a whole piece of work then about, okay, pension funds, you've got all this free, you've got more capital, how are you going to deploy it? And obviously working with other colleagues in government, we've got to make sure that those investable opportunities are there, and we've got to make sure that the public markets are match fit, as I was saying, we're getting rid of the frictions, etc. So there are two pieces to that. But why does this matter? It matters because we need more capital in our markets. Pension funds have a huge amount of capital. We need to not just get that capital in, but we need to increase the returns to the savers, who are also British people, from holding those being members of those pension funds. So there is a duality to this, right? It's increased returns because, frankly, changing the risk appetite, and I've talked a little bit about this in public, both before taking this post and subsequently. There is all the legal regulatory stuff. As I said, we've literally done the SI on Solvency II reforms, which are around Mansion House and pension funds. But there's also a cultural piece. And I speak to the many journalists that we're happy to have in the room, in particular, but also all of you, right? There is no point as a country having such a negative outlook that we force everybody to try and take away risk in every conceivable instance, because you end up with a really safe graveyard. If you have a really safe graveyard, nothing goes wrong, but nothing happens either. And we now, culturally, as a society, it's not just for government, it's not just for regulators, it's for journalists, it's for investors, it's for fund managers, it's for CEOs of public companies, to say, we are backing Britain. We know this is a fantastic place to grow your business, or launch a business, or scale a business. And we're going to take risk. And you know that as a society, if we can do that together, then overall we'll become more prosperous. And these reforms will take effect. I suppose what I'm really trying to say to you is, if we do the reforms but don't have that cultural change, it won't have the benefit that I think we all hope.
Yeah.
And that cultural change is the hardest bit. But that is part of why, I'm working with the regulators. I want to stress that, with the competitiveness objective that we've put in. So we're now saying to regulators, and this is an integral part of the reforms, but it pertains to the cultural piece. We're saying to the regulators, you now have to demonstrate how your actions are going to benefit the growth of the British economy. They never had to do that before. We're now saying to them, and we published a set of metrics the other day, that they're now going to have to publish. Some are quarterly, some are annually, to show how they are doing that. That is part of showing they have to manifest that cultural change that we're trying to bring in.
And I guess, so it's good that you've sort of set almost like a benchmark for success there, but another benchmark I think that people will be looking at in terms of how well and how attractive the UK market is a revivification of the IPO market that's been in the press quite a lot.
Of course.
And do you think, speaking either as the city minister or as a former banker, I mean, do you think that the IPO market in this country will come back in a big way? And if so, when might that be, in your view?
Look, I'd say I'll give you a practical example. Before I was at HSBC, I actually spent most of my career in the city as a corporate lawyer. I was at Freshfields first, and then I was at Simpson Thacher and Bartlett. I did both private equity and I did capital markets. And, didn't sleep very much as a result. Love those firms, wonderful places, wonderful people. Now, I can remember how big the prospectuses were. It's a small thing, right? And they were one volume and they were sort of this big. And I remember floating various companies. Some fell over, some happened this big. I talked to somebody I know well, my little sister, who is a corporate lawyer in the city at the moment. She's a junior associate. And she sent me a photo, not of the information, but just on the prospectus that was on her desk that they were working on. It was like 3 times the size. And I was talking to her about this. And the prospectus rules are one of the key things we are changing. And those all coming live early in 2024, okay? Those prospectus rules changes, which Lord Hill had in his review, which was a couple of years ago, they are absolutely key to making sure that it is as easy and as frictionless as possible to list a new company in London. I should also mention the NatWest share sale. So that's not an IPO. Obviously, that's already listed, but we're going to do a big retail offer next year. Obviously, the timing of that, we've announced that already. At least I hope we have. Or we've announced it now. No, I'm kidding. The Chancellor has announced that. I was sitting next to him in the Autumn Statement when he did so. So the NatWest share sale, I want to use that not just as an opportunity for British people who, frankly, I don't think as a majority own enough equities and understand how they work. I want to use that as an opportunity as almost a teachable moment for the country more broadly, but also to show the world that London is a fantastic place to do a big share offer, right? And so to connect all of these things, you've got the reforms we're doing, which should make it easier to IPO a company or to do a big share offer. You've then got the retail aspect of that to make sure that ordinary people are playing into that, and hopefully be able to say more of that next year in terms of things that on the retail side that we can do, not just institutional, right? There's no point having, fantastic money being made for institutions. Ordinary people need to benefit from that as well. So you've got those reforms, you've got the retail side, all underpinned by cultural change, which is London is a great place. We've sorted out the frictions. We're match fit again. List your company here, raise money here, invest here, and we can be successful. I'm afraid a large part of this is down to us as an ecosystem, as a culture. Are we going to show everybody and explain to the people in our businesses who are in the US or in South America or in Asia that London is a fantastic place to do things? Or are we going to not embrace these reforms, what they are, and take the opportunities that are there?
All fascinating, and unfortunately, I've got a...
Oh, God, hopefully not too fascinating. What have I said? That's always a danger.
I've got a long list of questions, but I've only got time for one more, unfortunately. Okay. But you referenced the private markets in passing just earlier on, and I thought it was quite interesting that your predecessor, Andrew Griffith, sort of moved from your role, which is in large part sort of unlocking capital, to become the Minister for Science, Research and Innovation. So almost working with the startup ecosystem that should benefit from that capital. And I know that it's a stated ambition of the government to build a much more entrepreneurial economy, and particularly with the tech sector, and obviously the Prime Minister did a big AI summit. But the US has got Silicon Valley, and we've had Silicon Roundabout. And is the
Roundabouts
UK...
very fine things.
Yes, they are, and very useful. But I mean, do we have the scale, do we have the resources to have a liquidity pool deep enough to nurture that sort of economy?
Well, the proof of the pudding's in the eating. And if you look at our fintech sector, I think the answer is yes. Good. Right? Our fintech sector, outside the US and China, is the biggest sector. I think we've got more unicorns than France and Germany combined. So our fintech sector shows that we do have that sort of scale. The problem, if I may say so, is less the startup, more the next phase, right? We all know the story. Company launched here, great talent, great people, great culture. They get to a certain size, and then people say, oh, they should probably go to the US to get that scale-up capital. We need that here. That's why we're doing the reforms. That's why we want more pension funds money. That's why we're removing the frictions. That's why I'm trying to change the culture. That's why we're working on the regulator to promote growth and competitiveness, right? Because if you care about the British economy more broadly, you need to grow those companies from medium-sized to big companies in this country. And that is a key part of what we're doing.
And what an optimistic way to end.
Very important.
So cultural change, making the markets match fit again, making the UK economy a roaring success. So thank you so much.
Not at
We're
all.
all hugely grateful for your
Thank
time.
you.